All right, let's jump right in. If you've ever stared at a chart and just seen complete and utter chaos, trust me, you are not alone. But what if I told you there's a predictable, kind of elegant logic behind all that madness? Today, we are going to build a simple but really powerful framework for a trading system. The goal? To turn that chaos into clarity. For so many traders, looking at price action feels like trying to guess where lightning's going to strike next. It seems totally random, right? But let's just ask a different question. What if it's not random at all? What if there's a hidden logic to it? What if every single move, up or down, has a very specific and identifiable purpose? Okay, this right here, this is the core idea that once it really clicks, it changes everything. Price isn't just wandering around on your screen, no. It's on a mission. It's always, and I mean always, moving to do one of two things. It's either hunting for pools of liquidity or it's going back to fix imbalances in the market. That's it. That's the whole game. So what is this liquidity that price is so obsessed with? Well, the simplest way to think about it is as the market's fuel. It's basically all the stop-loss orders sitting there from other traders. You see, huge institutions, what we call smart money, they need to tap into those pools of orders to fill their massive positions without wrecking the price. So price is drawn to that liquidity like a magnet. Okay, so if we know why the market moves, the big question is how do we actually use that information? Well, we can apply a really simple three-step framework. This gives a logical structure to every single trade you think about taking. First, we figure out the most likely direction. We call that our bias. Second, we spot a specific recognizable pattern. And third, we wait for the perfect moment to execute. Let's break down that first step, finding your directional bias. Now, this is not about having a gut feeling or guessing. It's about using some simple, repeatable logic to figure out where the market is most likely going next. Is it going up or is it going down? And the most fundamental way to do that is to just think about value. I mean, it's just like when you're shopping. You want to know if something is expensive, trading at a premium, or if it's a bargain, trading at a discount. We're going to apply that exact same thinking right here to the charts. And this is where it gets super practical. All you have to do is find a recent significant price range, a clear high and a clear low. The top half of that range, that's your premium zone. It's expensive. The bottom half, that's your discount zone. It's cheap. The logic is so simple. You want to be a buyer when prices are in that discount area and a seller from the premium area. It just makes sense, right? Awesome. So once you have your direction, your bias, the next step is to just sit back and wait for the market to kind of show its hand. You're now on the lookout for a recognizable pattern, what we'll call a playbook, that tells you a high probability move is getting ready to launch. And let's be really clear here. These are not just random squiggles on a chart. These are structured, repeatable sequences that happen over and over and over again. So let's look at two of the most common playbooks you're going to see all the time. So first up, we've got the AMD model. It stands for accumulation, manipulation, and distribution. So first, price just chops around, goes sideways. That's accumulation. Then, and this is the key part, you get a sharp, false move that grabs liquidity and traps a bunch of traders. That's the manipulation. After that, the real move kicks in, the distribution, and price expands powerfully in the opposite direction. It's a classic trap and reverse. And here's another classic, the market maker model. With this playbook, the market literally builds up liquidity. It creates these really obvious, tempting highs or lows that just scream, trade me. Then, boom, you get a sharp reversal, and it aggressively goes right back to attack the very liquidity it just created. It's pretty amazing to watch once you know what you're looking for. All right, let's nail down the final and maybe the most important piece of our framework. So you've got your bias, you've spotted a playbook taking shape. Now what? How do you actually pull the trigger and get into the trade? How do you find that precise, low-risk entry without getting in too early or too late? I want you to really think about this quote. See the liquidity or be the liquidity? A great entry is always, always a reaction to something happening in the market, like price grabbing a pool of liquidity. If you're not reacting to those events, you're probably going to end up being the liquidity for someone else. And that's a tough spot to be in. So to be absolutely clear, an entry is not a guess, it's not a hope, it's the final piece of confirmation we need. It's the market's way of telling us, yep, your analysis was right, and that playbook you spotted, it's happening right now. So what does that confirmation actually look like?
Well, a really high probability entry is almost never based on just one thing. It's about a few different confirmations all lining up. For example, you can ask yourself, is price reacting at a major level from a higher time frame? Is there a crack in correlation between, say, two different stock indexes? Or has a specific price pattern, like a breaker block, just formed? When you get two or three of these things happening at once, your confidence just shoots through the roof.
Okay, so let's put it all together now. The goal here isn't to memorize 100 different things. It's about getting this simple, repeatable process into your head so you can use it to navigate any market anytime.
This three-step loop, bias, model, entry, is what turns trading from a gamble into a structured, logical process. You just ask yourself these three questions in this order. First, where's the value? Am I in a premium or a discount? Second, what playbook do I see forming? And third, what is my specific confirmation to get in? That's it. That's the framework.
At the end of the day, the real secret isn't finding some magic indicator. The power comes from building your own deep understanding of how the market actually works. So the question I want to leave you with is this. Which piece of this framework, bias, model, or entry, are you going to focus on mastering first?